Now, if you were a European lender with private banking aspirations, then Switzerland was the place to be. But as some of the big players start to move back to where they came from, it raises the question as to whether or not Swiss bank secrecy is the main reason for this, or whether or not there are some underlying issues at play. Here to discuss this is Osmond Plummer. Osmond, thank you very much for coming in today.
Thank you for inviting me.
Now, if we look at the figures, the number of private banks who have shipped out of Switzerland, as it were, fell to 129 in May from 145 at the start of 2012. Is this really a significant number in your opinion, and how badly is this affecting the business reputation of Switzerland, would you say?
I think it's fair to say that a 10% reduction in the number of institutions, foreign institutions in Switzerland over 18 months is significant. However, there has been talk of consolidation in the industry for a significant period of time. Partly there are issues related to Swiss banking secrecy and its drip feed of a death, as it were, but also because Switzerland has become a very expensive place to do business as the currency has increased in value and assets tend to be booked in dollars, so revenues have decreased. So critical mass has become a very big issue for a large number of players, and if you aren't big enough in the market, it's simpler to retreat, sell and go and do something elsewhere.
Now, all the controversy and the headlines, the long drawn out process of FATCA and the ordeal with the US, as it were, just how much is this damaging the reputation, though, in terms of business mentality in Switzerland, would you say?
I think one of the problems is that it's turning into death by a thousand cuts rather than something being done, dealt with and then move on. The banking secrecy has been an important part of Swiss banking and will continue in terms of confidentiality. What has changed is the ability to bury money and hide it from other governments who wish to tax that money. That puts an impetus on certain institutions to say, well, there's no major necessity for us to be in Switzerland where we had legal protection. We can do this just as well in London or in New York. So for a number of institutions, British banks who are maybe retreating, have problems wishing to raise assets, it makes sense perhaps to say enough is enough in Switzerland and move on.
Well, that is another thing that I wanted to move on to. Like, the controversy is an easy thing to pin it on in terms of the big players moving out of Switzerland. But if you take into consideration, like the Basel III regulations are just starting to have an impact. So there are these other factors at play, aren't there?
Yes, banks in general need to raise more capital. One way to do that is to sell assets. Private banking assets in Switzerland historically have been quite valuable. They're less valuable than they were. The price of businesses has reduced quite a bit. But there are a number of players who realise that by acquisition they can get strategic mass, and therefore they've got much more chance of surviving in the industry with all the increased costs of regulation that are coming in, compliance costs and so forth. It costs a lot more to do business in Switzerland than it used to.
Now, in terms of moving on, a lot of people are expecting even more of the banks to migrate away from Switzerland over the next 12 to 18 months. So if we look at the longer term scenario, maybe 5 years down the line, is Switzerland still going to remain the financial hub that it is, that it has been?
I think it will probably in 5 years' time look very different. It is always dangerous to predict the demise of an industry, but I think you will find that Switzerland will become an ultra high net worth location for assets that will be declared. It will be an international investment management hub, but a lot of the lower level business will retreat back to home countries where it will become declared money, and that part of the business will disappear. It's a comparison that is made is with the Swiss watch industry. You still have the expensive luxury Swiss manufacturers, but the lower end market and middle market has largely disappeared from Switzerland over the years.
Osmond, thank you very much for sharing your perspective on this topic. We're talking about people moving away from Switzerland in terms of where they're choosing to invest. But one question we want to ask you before you go away is the Dukascopy question. Now, namely, if you had $1 million US, where would you choose to invest for 1 year? If we look at the board, we have options being real estate, equity, bonds, gold, cash and oil. So where would you put the money?
I'd put the money at this point into real estate, and specifically, I would say luxury real estate in major capital cities, rather than secondary cities or otherwise. And that possibly costs more than $1 million, so if you could give me $10 million instead, that would be very helpful.
Well, the hypothetical $10 million are yours.
Thank you so much.
Thank you very much for coming in and for taking part today.
You're welcome.
Thank you. Well, that's all from Osmond and myself for the moment. Please do click back to Dukascopy TV for the hourly updates and plenty more exclusive interviews. Goodbye for now.